Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
All right, folks, good morning. Welcome to U.S. Markets Wrap. Let's take a look at how things shaped up last night. And we've got a bit of a lackluster session. The S&P 500 gave up earlier gains and closed lower. And that's after Fed Chair Powell signaled that the central bank is not ready to cut rates. And this as it assesses the impact of President Donald Trump's higher tariffs on the inflation picture. So the broad market down slightly by 0.1% at the end of the day to 6,363. The Dow Jones Industrial Average underwater by 0.4%. And we've got the NASDAQ, on the other hand, slightly higher, 0.2%. So let's check in now with Damian McIntyre. He is the head of multi-asset solutions at Federated Hermes. Damian, how are you doing today?
I am doing well. Thank you for having me. How are you, Brian?
Always great to have you on. Glad to hear that you're doing awesome. So let's get into how markets have been playing out. And this is, of course, with in recent days and weeks, seeing them hit new highs. But now it looks like we've hit a bit of a speed bump. What's driving the market action right now?
So right now, the market is really focused on the earnings season that has started about 2 weeks ago. So far, we've had nearly half of the names in the S&P 500 report earnings, and 75% of those companies have beat consensus expectations. So it's been a really good earnings season so far, but with a lot of the larger companies like the Magnificent Seven still on deck, and as you mentioned, Jerome Powell earlier today, the market was holding its breath, waiting to see if it could get a little more clarity on information before taking its next leg.
All right, waiting and seeing. So let's dive into the FOMC meeting first, and that's where we did not get a cut as expected. So how disappointed were markets on that front?
Markets didn't expect much of a rate cut going into this meeting. They were focused on any sort of discussion Jerome Powell would have. What was interesting was that Christopher Waller and Bowman also dissented. So this was the first time we had two Fed governors dissent since 1993. So there was a little bit pushback within the committee on Jerome Powell's view to keep rates unchanged.
How much was that due to perhaps political pressure that's been floating high in air with what's been going on with Donald Trump?
Jerome Powell has worked with Donald Trump, Joe Biden, and now again with Donald Trump. So he's had a lot of experience with political pressure, to say the least. He likes to say that he is focused on his dual mandate of labor, maximum force, and steady prices. And the tariff market is really what he is focused on right now. He stated in the press conference that the labor market is strong, that the consumer and other aspects of the economy are doing well, but he is concerned about what impacts tariffs could have in the coming months on prices in the United States.
Yeah, so there's a lot of waiting and seeing with the potential implications of those tariffs we've been watching out for as we tick down towards the tariff deadline. So let's dive into the earnings. And I'm looking at Meta's numbers. It does look quite encouraging. Looking at the second quarter, sales were up 22%. Notably, advertising revenue came in ahead of expectations. Is there a sign that perhaps the economy is doing well?
Meta had a very strong quarter, beating expectations, and as you mentioned, the ad revenue was particularly strong. Meta is kind of unique in this space where they have a lot of presence in the market and they have a lot of eyeballs looking at their product. So whether it's a full read-through to the entire economy about whether companies can pay forward to, for higher advertisements is still to be seen. We'll have to see some of the other companies later in this quarter. But its performance and the stock reaction is certainly a good thing for the markets and moving markets in the after hours.
Yeah, and talking about the, appetite for spending, we were also watching out for IT spending. And on that front, it does look Microsoft is putting in numbers as well, better than expected numbers with the demand for cloud computing. AI spending is still pushing along quite fine. So it does look like on that front as well, folks are not, in that sense, cutting back on their IT expenditure.
Yes, the potential for AI right now is massive. I heard you talking earlier about the Google AI Assistant. So the world is starting to embrace AI spending and how it can help in their companies. overall, companies like Meta and Microsoft and Google, they recognize that this is a potential game changer when it comes to their industry and a new frontier that they can generate revenue in. So we expect CapEx spending in this area to continue to be high for the coming quarters.
All right, so with all that in the backdrop, where do you see things going for the U.S. economy as well as the rest of the earnings season? What are you leaning towards when you're thinking about allocating which sectors to get into right now?
So we're overweight equities in our asset allocation models, and we expect earnings growth to continue strong through the rest of this year and into next year. We think that the overall industries will start to broaden out. So your areas such as large value and small caps could start to play a little bit of a catch-up game as the AI spend starts to benefit all sorts of different companies throughout the industry. But we think it could be a pretty positive second half of the year as the consumer starts to get a little bit used to what's going on with the tariff landscape and returning to what would be more of a normalized spending environment.
Okay, I'm just curious about where the retail side of things fits in because of the tariffs. Like Walmart's been flagging the potential implications. The automakers have also been talking about supply chains being hit. Are you going to be staying away from those type of industries?
So far, we've seen consumers hold up fairly well, so we're still taking a look at that, but we do think there is potential in those industries that maybe they've gotten a little bit overlooked in the fears of what tariffs might do. We did have GDP report in the United States this morning. It was 3% quarter over quarter, and the personal consumption component was a little light at 1.2%. But it overall shows the consumer that is continuing to spend money and continuing to grow despite all the headlines that are going on with tariffs.
Thanks, Damian. And we've been in conversation with Damian McIntyre. He's the head of multi-asset solutions for Federated Hermes. Stay with us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.